turn our attention to the Kenyan market, check in on what we're seeing from that end, and certainly powering ahead. If you look at where it ended the day off, up at a 4-year high yesterday and sitting down by 0.25% today. So giving up some of those gains yesterday. We saw over 3.5% to the good coming through post that decision by the Supreme Court to uphold the election result with Uhuru Kenyatta as the president. Let's check in on how the currency is faring on this hour. 84.75 against the greenback, and you're looking at the shilling holding on to its 6-month gains. Well, let's delve into some of these issues now, get an update on what we can expect from the market for the rest of the week. Kimathi Ikiao, independent analyst, is standing by from Nairobi. Kimathi, thanks for joining us. So the market's slipping back ever so slightly, it seems, but what are your views right now as to the interest in the market, specifically from foreigners, post, of course, the decision by the Supreme Court, as I said last Saturday?
Well, a very good afternoon to you. Yes, the market continues to be very optimistic. The optimism that we had seen a fortnight ago is back, especially with that Supreme Court decision. Now, the focus is actually changing as to exactly what the Uhuru administration will have in terms of its economic policies. The market is out there looking at exactly what will be the size of his cabinet, what the first budget will read and look like, and also exactly how the Uhuru administration will try and contain the fights that they are likely to be as far as the constitutional transition is concerned, relating to the central government and the county governments. So a lot of economic policy issues coming to the fore, but the market all in all very, very optimistic, very positive. But beyond the 5,000 point level, as far as the NSE is concerned, we're beginning to see a lot of profit taking coming in. A lot of analysts beginning to warn that some counters may be overpriced. So there is that level of caution coming out, and it really is for the well-heeled investor to take that caution in good stride.
Yeah, so I suppose you really have to look at which stocks they're saying are overvalued right now, because as you were saying, there's some commentary around shares in general. They're saying overvalued by 30%. But what's your views on the stocks which you should be wary of when it comes to the rally we've seen so far?
Yes, the rally has really benefited a lot of, especially the finance stocks, more specifically the banking sector. And we see that most stocks in the banking industry, in the banking sector, have actually gained way over 30%. The only laggard seems to be Barclays Kenya, which year to date has returned about 15% year to date, while all the other banking stocks that are listed have given returns of well over 30%. So we are beginning to see a lot of caution coming in, especially as far as the banking stocks go. Very specific caution on terms of KCB and Equity Bank. Equity Bank up about 49%, KCB up about 42% year to date. And we're really beginning to be very worried about what kind of returns these companies will post, especially now that the first quarter of the year is behind us. We begin to expect to see Q1 results in the next fortnight or so. And the banking sector has been a bit silent given the intense political activity there has been. The economy as a whole has suffered actually over the past quarter. So there is that aspect of caution as far as especially the banking sector is concerned. Other counters begin to be mentioned, the likes of East African breweries and Uchumi supermarkets, which a lot of people feel that really they are towards the end of their bullish gains. So yeah, a lot of caution as far as stocks are concerned.
Kimathi, I hear what you're saying, but certainly if you look at what the market overall is doing, it continues to ride the positive sentiment. It's sitting at a 4-year high. So you've got this momentum play in a sense, even though, for example, from local investors saying that, hold on, fundamentals don't really warrant stocks trading at these levels. So do you become a bit of a momentum player right now, given the fact that foreigners are still buying these stocks at these elevated levels?
Yes, that's absolutely right. This kind of situation, it's the momentum play is what is really driving a lot of wind around these investments, these stocks. So that caution is really for the well-heeded advice, is well advised to be heeded pretty well, because a lot of even the foreign investors have been over the past several months taking positions, and now we're beginning to see them take a slower step and begin to take on profits. But it's the local players that seem to be, last on the scene, and nice when they begin to go in. So those that are coming onto the market over the month of March, really, we're not seeing too many gains for them being left on the table. But it's very positive to have that optimism. And a few things that the court ruling actually brought to the fore is that the institutions really are working. And these are absolutely very the most elemental things to have for economic growth to take over. You need those property rights instituted, you need the capital markets working, you need the currency also, you know, fairly predictable. So this all seems to be happening. And keep in mind also, last year we saw a lot of crude discoveries. So the Uhuru administration has the challenge of managing all these positive issues and keeping the negative aspects at bay and delivering the country towards a more better economic footing.
Well, let's turn our attention to some company news, because interesting that Equity Bank saying that until their subsidiaries in East Africa start generating a quarter of their income, they're going to halt their expansion plans in the region. And it's interesting kind of change in strategy, given the fact that they were even considering going into Central Africa, going into Western Africa. What do you think is kind of spurring this decision by management right now? Do you see it as a slight shift in their strategy?
Well, not particularly. I see it in terms of, well, beginning to bite the bullet in terms of getting out there to understand these markets. Some of them already are bringing favorable profits, but they're just not adequate enough. And for the Kenyan market, the Equity Group has really benefited from being a local player and having an operation in the country for well over a good number of years. So it takes time for the very same company to replicate even that kind of success, or at least that kind of market understanding, even just across the border in Uganda, in Tanzania, leave alone getting further out into DRC and more into the Central African market. So it is a very well-heeded kind of strategic approach that the Equity Bank Group is better placed to at least begin to consolidate those gains that they have this far and kind of hold out on further expansion. Because keep in mind, a few of the great things that have augured very well for equity in the local market has been the agency banking. And replicating that in several of the other markets is proving to be a bit of a challenge, and the company really needs to understand the local dynamics of this kind of neighborhoods.